Today is Monday, 16th of June, 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights.
Welcome to this deep dive.
Good to be here.
Today, we're cracking open a recent financial briefing from Preeti Capital,
Right.
trying to understand the latest market moves, what's really driving them.
Yeah, there's a lot going on.
Our goal is basically to cut through the noise, pull up the key insights from this source, and give you a clear picture of the landscape right now.
A snapshot, essentially.
Exactly. Your essential update, straight from this particular source. Let's get into it.
Okay, so what immediately jumps out from this briefing is how it describes the market. It calls it walking a tightrope.
Okay.
That image itself is pretty telling, isn't it?
Yeah, it suggests a delicate balance. Things could swing quite easily.
Precisely, where, any little nudge could send things one way or the other.
Okay, sets the stage. And does the source point to what's causing this balancing act?
It does. It wastes no time pointing to the dominant force right now, geopolitical tensions.
Ah,
Specifically, it flags those recent airstrikes between Israel and Iran, calls them a major market shaker.
right, and you can see the connection there. What was the immediate impact mentioned?
Well, the briefing shows it hit the energy sector hard.
Okay.
Describes energy as having, and I quote, skyrocketed. It saw a huge 5.42% gain just last week.
Wow, 5.42%. That's not small change.
Not at all. It's a direct reflection, the source implies, of global events hitting that specific part of the market.
And it gives specific numbers for oil.
It does. West Texas Intermediate crude climbed 0.34%,
Okay.
and Brent crude was up 0.26%.
And the reason given? Just fear.
Pretty much. The source says it's straightforward, a pure fear of potential supply disruptions because of those, escalating tensions.
Right, makes sense.
Exactly. And natural gas got pulled into it, too. Rose 2.96%.
Okay. Same
When the-
reason?
The briefing notes it's a mix there, both that geopolitical risk premium being added
Okay.
and also just the usual seasonal demand kicking in.
So the takeaway from the source here is pretty clear then. Global instability equals higher energy prices.
Directly. Something that, can quickly impact people's wallets.
So faced with that kind of volatility, that uncertainty, how does the source say investors are reacting? What are the trends?
Well, the briefing points to a pretty distinct shift.
Okay.
Investors are moving into what it called defensive plays.
Ah, the classic flight to safety.
Exactly. It's a standard strategy when caution takes over. You rotate capital into sectors seen as, more stable, less exposed to sudden shocks.
And where's that defensive money landing, according to this source? Which sectors?
Healthcare is a standout. The briefing says it rose a solid 1.48%.
Okay, healthcare. What else?
Real estate and utilities also saw modest gains.
Right.
The takeaway here reading the source is that these are the perceived safe havens, sectors people tend to rely on, regardless of the economic climate.
So money's flowing into stability. Which sectors are seeing investors maybe pull back? Where's the pressure?
The source lists several areas feeling the heat. Financials took a pretty significant hit,
How big?
tumbled 2.04%. And the briefing actually calls this out specifically.
Oh,
Says it raises red flags about underlying stress. That's quite pointed language.
it is. Okay, financials down. What else?
Industrials were also down 1.48%, and consumer discretionary fell 1.0%.
So that paints quite a clear picture from the source material, doesn't
It really does.
Money rotating away from those economically sensitive sectors
Yeah, things tied to growth or spending.
and heading towards safety. So the insight is this cautious sentiment isn't just talk, it's actively reshaping portfolios.
Right. And there's that particular flag raised about the financial sector, based on this data anyway.
It definitely makes you wonder, as the force seems to suggest, what these shifts signal about confidence in the economy overall.
Absolutely. It's a key question right now.
Okay, beyond the sectors, the briefing gives us some broader market indicators.
Right.
Let's talk about the S&P 500 data it mentions. What's that showing?
Yeah, this is where the picture gets kind of interesting, a bit mixed, according to the source.
How so?
It highlights that a decent chunk of S&P 500 stocks, 72.3%, are still trading above their 50-day moving average.
Okay, and the 50-day is usually seen as more short-term momentum.
Exactly, a short-term gauge. But There's a significant contrast, the source immediately points out. Only 46.9% of stocks are above the longer-term 200-day moving average.
Ah, okay. That is a big difference.
Right, and that's a key indicator for the longer-term trend, so the discrepancy is the insight here.
What does the source say it suggests?
It suggests momentum in the near term, maybe some pockets of strength still,
Okay.
but lingering uncertainty, real caution about the direction over a longer horizon.
The briefing also mentions the RSP-SPY ratio falling,
Hmm.
0.39%. Can you quickly remind us what that signifies?
Sure. So RSP is the equal weight S&P 500. SPY is the standard market cap weighted one.
Got it.
When that ratio falls, like the source says it did, it specifically indicates a tilt towards the mega cap names.
Meaning the biggest companies are driving performance.
Essentially, yeah. The largest companies are doing better than the average stock in the index. Suggests the market's being propped up, perhaps, by the big players.
And we see that reflected in the main indices themselves.
We do, according to the source. The Nasdaq Composite fell 1.3% last week,
Okay.
and futures for the S&P 500 and Dow Jones were pointing lower when this was written.
So if you combine all these signals, the mixed moving averages, the mega cap tilt, the indices under pressure, what's the source's overall perspective?
The briefing's take is that while, yeah, opportunity exists, you really need precision in asset allocation.
So not a time for broad bets.
Definitely not. It's about being selective, which, ties right back to that move into defensive sectors we talked about.
Right, it all connects. Okay, let's look at some other market signals the source covers. Commodities, currency. These also tie into that geopolitical picture, I imagine.
Absolutely. The briefing notes a clear move into traditional safe haven assets.
Like gold.
Yep, gold nudged up 0.09%, and silver saw a more significant surge, actually, up 0.87%,
And the source explicitly links this.
to rising demand for safe haven assets. Says nerves are frayed.
Okay. What about the US dollar?
The dollar index actually slipped a bit, down 0.22%.
Interesting. And volatility. The VIX, the fear gauge.
Well, the VIX actually dropped by 5.04%.
Ooh, so calming down.
You might think so, but here's the crucial detail the source adds. It remains elevated.
Ah, okay. So even with the drop, the level is still high.
Exactly. Suggests market unease hasn't really dissipated. It's still, quote, keeping nerves on edge.
So the takeaway is volatility is still very much a factor to watch.
According to the source, yes, definitely.
Okay, let's shift focus a bit. From the broad signals to specific events and maybe some company stories, the briefing highlights. First up, the Fed. Always important.
Oh yeah, the elephant in the room for many market watchers. The source notes significant market anticipation building around the upcoming FOMC meeting.
That's the big question.
The one everyone's watching for, highlighted here, is any hint of a potential policy shift.
Right. These meetings are always potential market movers.
Huge catalysts, absolutely.
Now, the briefing also calls out some specific companies with big moves. On the winning side, Sunrun Inc. Massive jump, it says. 18.06%.
Yeah, huge.
What's the reason the source gives for that one?
The source attributes that huge gain to a really interesting development. Sunrun connected 130,000 home batteries to the national power grid.
Wow.
The briefing calls it a game-changing move for the renewable space.
Suggesting new potential for grid stability, distributed energy,
Yeah.
that kind of thing.
Exactly. That seems to be the excitement there.
Sasa Limited also rallied. What was behind that, according to the source?
The source points to a double boost for Sasol.
Okay.
One, they appointed a new independent director. Two, they had some favorable court wins.
Ah, so good governance news plus legal wins boosting confidence.
Seems so, yes. Together, they really boosted investor confidence, according to the briefing.
And in the quantum computing space. Any highlights?
Yeah, the source specifically mentions D-Wave Quantum and Rigetti Computing, says they're gaining ground as innovation accelerates.
So pockets of tech strength drawing attention despite the overall caution.
That's the read, yeah. Specific innovation stories cutting through.
But it wasn't all positive news, was it? The briefing also highlights some notable losers. Archer Aviation, for example, plunged 15%.
Ouch.
Yeah.
Why did the source say that happened?
That sharp drop came right after Archer announced a massive capital raise, $850 million.
And that spooked investors. Raising money is usually for growth.
It can be, but the source's take is clear here. This move spooked investors. It shows that even raising money can face a negative reaction, especially if the market is cautious or maybe dislikes the size or terms.
Okay. What about Newegg Commerce?
Continues to falter is the phrase the source uses, despite compliance efforts and product rollouts.
So struggles persist there. And Tonix Pharmaceuticals, also under pressure. Remains under pressure, yes. The reason the briefing gives there is that its clinical progress, while it's happening,
Isn't enough.
yeah, it fails to offset regulatory and financial hurdles.
Okay, so these examples really underscore a point the source makes, right? About context.
Absolutely. That even specific company news needs to be viewed through the lens of the current market mood and any existing challenges that company faces.
And based on these examples, like Tonix and Archer, the source includes a specific warning.
It does. It advises investors to tread carefully in biotech and speculative tech spaces right now.
Given the volatility we just saw, that seems like a key takeaway from the source.
Definitely a cautionary note worth highlighting.
Looking ahead, the briefing also flags some high-stakes earnings reports coming up. And it even gives insight into the volatility the market is expecting around them.
Yeah, through the implied moves.
Yeah.
This is where you get a sense of specific company catalysts the market is really bracing for.
Right.
For Jabil Inc., the source notes the market is implying a 7.9% move after earnings. CEMIG, that's Compañía Energética de Minas Gerais, has an even bigger anticipated swing, 8.95%.
Wow. John Wiley and Sons.
Looking at a potential 9.89% move, the source links that one to the company needing to prove its digital resilience.
So a key test for them. And La Z-Boy.
An anticipated 9.3% swing after hours. The briefing specifically calls this one a telltale signal of consumer demand trends.
So watching La Z-Boy for clues about the consumer.
Exactly. These implied moves are fascinating because they show just how much uncertainty or expectation is built up around these specific reports.
Moment that could really shift perceptions.
Could confirm or challenge assumptions about sectors or broader trends like consumer health, like with La Z-Boy.
Got it. Okay, finally, the briefing shines a light on dividends. Some companies returning value.
Yeah, a few names highlighted for returning value that way. Huntington Bank Shares, J&J Snack Foods, Upbound Group, and Chemung Financial Corp.
And how does the source interpret these actions?
It sees them as signals of confidence and resilience within those specific companies.
Which, in a cautious market, is another data point people look for.
Exactly. Stability, resilience. It's valued right now.
Okay. So as we've seen digging into this pre-80 Capital briefing, the market picture right now is, well, incredibly dynamic. Complex.
Definitely complex, pulled by a lot of different forces.
Yeah. Everything from global geopolitics instantly hitting energy prices,
To investors rotating into those defensive positions.
all the way down to specific company news,
Yeah.
like Sunrun's battery connections or Archer's capital raise reaction.
Right.
The source material really paints a picture of a market demanding careful attention. Focus on the details.
Careful navigation seems essential, based on this brief.
So here's a final thought maybe for you, the listener, to consider. Given how interconnected all these factors seem to be, a geopolitical event shakes energy, which impacts sentiment, which reshapes sectors, while individual companies navigate their own stuff. What single piece of data or observation from this briefing do you think is the most crucial indicator, the one that might give the best clue about where the market could head next?
That's a tough one. Lots to choose from in there.